Okay, guys, welcome to another test broadcast for the London Open. Alright, so folks, what do we have? I can't really quite put it as a bullish engulfing for yesterday's candle in Euro, but it came close. So, what do we have now from an overall perspective? Well, if I look at our charts, I see that we've triggered this double top clearly with the Wednesday sell-off. We failed to develop any follow-through momentum. What else do we have? If I were to put back our Fibonacci's from before, that shows me that we pulled back to 38.2 Fib retracement. Typically, aggressive traders would use 38.2 Fib retracement level as an entry point. Okay, so pulled back to 38.2 Fib. Do we have an excuse for a further dollar rally? If I look at the calendar, we've got data from the US later, but we're talking about personal consumption expenditure here. And from what we've seen in the US the past 2 months, I don't think that anecdotal evidence would suggest that there's much of an upside for personal consumption. Not when people's jobs are getting axed in the government. And of course, the ongoing trade wars or the threats of the trade wars then probably meant that even businesses were scaling down. And if people feel that if they're not going to have any jobs anymore, they will likely not be spending all that much. All right. So calendar-wise, things might actually be bad for the US. If I look at the indicators, what do I have? Average true range is at 86.3 pips for your euro. You appear to be coming off the oversold levels in your daily stochastic, and we see these are down. If we go intraday, what are we looking at? Hourly charts. We've consolidated. We are a few minutes before the open of London. I think that this is a time for me to put some straddles. By the way, we are using, okay, I'm not going to mention the prop firm we're using because we're not sponsored, but we are using a prop account. So what we want to do at this point is I just want to put some form of sell stop below the lows for the day, and then a buy stop above the high for the current candle, which is basically the high for the day. So we have a straddle, meaning we're just waiting we will just be waiting which side gets triggered. So let me just put our sell stop first. Let me adjust that towards here. For some reason, this platform always has a trail stop for my sell positions. I actually don't know why that is. Okay, and let me adjust the lot size. Modify the order. We are using 300k of your base currency. Base currency should be your euro. Alright, now high for the day is at 108.01. Let me put a buy stop above that level. So let me put it at 108.29. That's a bit. So what will happen at this point? If at the open of London market we have people thinking big picture, you're likely to continue easing given given your double top breakout. If those people will be present, then our sell stop will be triggered and we might be testing 38.2 Fib retracement again. It is not normal looks like even before the open our sell stop has been triggered. Okay, so again, it's not normal for prices to just bounce off 38.2 Fib retracement levels. If I look at the daily chart, yes, we have sort of a bullish engulfing candle out of yesterday's move. If I look closer, you will find that yesterday's open was actually inside the body of Wednesday's candle. So again, we said looks like, but not an exact bullish engulfing pattern. Okay, now our sell stop has been triggered. So what do we do? Let me go back to our hourly chart first. So what should be our target here? Well, okay, I'm having problems. Let me just modify it from here. So average daily range, as we said, is about 86. Let me verify that. 86.3. We have our highs at 108.01. So we are looking at something like 107.40 to give us your average daily range. Remember, that's average daily range. Chart wise, what do we see? We have the lows from yesterday right about, let me just drag the cross here, right about 107.52. Okay, so lows from yesterday 107.52. That's definitely within your average daily range. Those lows from yesterday will now act as a support. But remember, we don't want to push our luck. Push our luck means you're targeting the exact numbers as far as ranges are concerned. I'd want us to look for a price just above your average, rather just below your average daily range. Okay, we want to look for pips that's a little bit short of that 86.3 number. And given the support at 107.52, I adjust things a little bit more. We want our TPs to get hit. The worst thing that you can feel when you're trading is then you're just a little bit, when the market is just a little bit short from hitting your profit target. That's one of the worst feelings to have. Now, of course, we said that this is a prop trading account, and the particular prop firm that we use also has that consistency rule. So let's see, given that the evaluation target is $5,000 and the consistency rule says that we should not have profits of more than 20% of the target. So we don't want to have, or rather we want our profits to be less than 1,000, otherwise it will be invalidated. So we will be setting our target price for the short at about, let's modify this, $107. I'm gonna place it at 107.60. All right. What else we're seeing at this point? We are now actually open in the UK. We're not seeing any follow through out of the earlier attempt to break lower. We're actually stuck inside that consolidation, which means that it's possible that I could actually have my buy stops getting triggered. It's a matter of where will momentum kick in. Okay, if that's the case, we would want to adjust our stop loss for the short that we took. Okay, I want that stop loss just above the consolidation high. Sorry. So let me just drag that. You see this green line there? That's our buy stop. So let me drag our stop loss just above that level. And what do we have then? So if we don't see any follow through to the earlier attempt to sell off, then at some point, market's really going to get out of this consolidation. So it's possible that our buy stop will get triggered. If our buy stop gets triggered, what should be our target on the upside? The lows are at 107.81. Again, average daily range is 86.3. You add that to your 107.81, you're talking about 108.60. And if we look at our charts, where do we find resistances? Yesterday's high is at 108.21. The day before that, we have a bit of a consolidation high at 108.29. And if I go to Monday, we have this line here around your 108.57 area. So there's actually a lot of upside. Alright folks, so what do we use as our price target for any buys? Well, if that's the case, we will put a price target right around here. I think a resistance that's developed out of a consolidation is likely to be stronger than a resistance that came out of a tail or a wick in this case. So I'm going to place our TP just under that 108.29 area. Let me modify our order. You better make that 300K. And place that take profit at 108.29. Modify. So now it's a waiting game. Now, okay, if you're someone who has a day job, I would suggest that you go ahead, do your day job, leave it as is. If you've got time to kill, you're gonna monitor the market, then what should you be looking for? Of course, we plan things. We have our stop losses, we have our take profits. But if you do have time, I would suggest that you monitor, keep an eye on the market, and if for some reason you see prices generating hammers, such as this here, let me just open this. If you see prices generating hammers, candles that look like this, inverted hammers, basically candles which has a small body and a long wick or tail, and that's going against the trade that you have, to me that's a suggestion of getting out. Okay, so if over the next couple of hours you start seeing candles that look like this here, or candles that look like this here, then those are signals to you to get out of any selling position in this case, get out of any buying position in this case. Let me just erase that. So for now folks, we don't have much momentum going on. We're only 6 minutes into the open of the London market. We find ourselves with our sell stops already triggered. We've got our targets with those sell stops right around yesterday's lows. Okay, again, we chose that level because we want to stay within the consistency rule of the prop account that we're using. If you're using your own money, you might want to maximize things, and if you're, maximizing things means you might want to look at your statistics. Again, what's the ATR? Okay, and you put your take profits near the ATR. As the trading day goes, if I had the time, I would want to actually fiddle a bit, adjust those price targets. Okay, according to what the ATR is. It's really important that you consider that ATR number. When you're trading, there's no guarantees that you're always going to win. But if your winners happen to be big enough, happen to be near the average daily range, meaning you've maximized the potential profits by getting, but I'm not saying getting most of the average daily range, but from the extreme point of from your entry towards the price target, if you get that number, that kind of trade would save you from potentially a series of small mistakes, a series of small losses. So again, if you're trading your own money, you're not following some prop firm's rules, go for the swing. Okay? Of course, when we say go for the swing, that doesn't mean that you have to act stupid. If you find yourself with an exit signal, get out of the market. Okay? Nothing's perfect here. You're playing with probabilities, and hammers, dragonfly dojis, high wave dojis, those are telltale signals of a potential shift in market psychology. So at that point, you just get out. Okay, so I guess that's it for Euro, folks. This is just a test broadcast after all. At some point, we may actually want to do something more interactive. But for now, I'm just talking to myself. So, yeah. Goodbye for now.